No matter the current market conditions, when viewed from a longer time frame, cryptocurrencies have been rising in popularity and have become a part of the mainstream dialogue. Bitcoin, NFTs, meme coins, and DeFi are all now topics that most people recognize, even if they don't understand what they are. So let's take a look at the cryptocurrency that started it all, Bitcoin. Hey everybody, welcome. This is the third installment of our short series of crypto concepts for beginners. Last time I gave an introduction to blockchain technology. And today I'm going to talk about the world's biggest cryptocurrency, Bitcoin. This is a video geared toward beginners, but it can also be useful for you even if you've been in the crypto space. Sometimes it gets noisy and you forget about the main concepts, so this can be a good refresher for what is Bitcoin. If you enjoyed this video, please remember to like, comment, subscribe, and share. And without further ado, let's jump in. Bitcoin was created by a person or group that went by the name Satoshi Nakamoto. To better understand Nakamoto's motivation for creating Bitcoin, we can look at some of their quotes. The Times, 3rd January 2009, Chancellor on brink of second bailout for banks. This quote was written into the first Bitcoin ever mined, meaning that it's a permanent part of Bitcoin and always serves as a reminder of Bitcoin's purpose. The quote is a dated newspaper headline that highlights the failure of the banking system. Satoshi didn't believe in trusting centralized entities to control money, and created Bitcoin following the 2008 financial crisis and bank bailouts. To get a more detailed explanation of Satoshi's thoughts on this matter, we can look at another quote. The root problem with conventional currency is all the trust that's required to make it work. The central bank must be trusted not to debase the currency, but the history of fiat currencies is full of breaches of that trust. Banks must be trusted to hold our money and transfer it electronically, but they lend it out in waves of credit bubbles with barely a fraction in reserve. We have to trust them with our privacy, trust them not to let identity thieves drain our accounts. Their massive overhead costs make micropayments impossible. This quote explains Nakamoto's thoughts on centralized control in further detail, and highlights one of the primary Bitcoin innovations of building a trustless network. Nakamoto first released Bitcoin's white paper in late 2008, which outlined the principles behind Bitcoin. In the white paper, Nakamoto explicitly stated that the cryptocurrency is used for people to control their money themselves, without relying on a third-party intermediary. Bitcoin follows its own programmed rules so that no one can manipulate the supply or restrict its use. It also provides a final settlement for every transfer, and sending it across the world is just as easy as sending it to your neighbor. Bitcoin was officially launched on January 3rd, 2009, when Satoshi Nakamoto mined the Genesis block of Bitcoin. 2 years later, Nakamoto stepped down and passed leadership to Gavin Andresen, a lead developer for part of the Bitcoin project at the time. While there have been numerous rumors of Nakamoto's identity, nothing has been confirmed. Nakamoto's early departure and continued anonymity are major elements contributing to people's trust in Bitcoin. Bitcoin is a free, open source software, and any developer can contribute to the project. So, with Nakamoto gone and their identity unknown, there's no central figure whose personal actions will be directly tied to Bitcoin, making it truly decentralized. Bitcoin is the first and most well-known cryptocurrency in existence today. As a cryptocurrency, Bitcoin uses cryptographic proof as a security measure and can be used as a currency to pay for products and services. Bitcoin allows users to store, measure, and transfer wealth without the need for an intermediary. Moreover, Bitcoin is digital, meaning that it doesn't have a physical form. Instead, it's represented as code stored on computers, unlike other stores of value such as gold and oil. Bitcoin's supply and rules are written directly into its code, with a large group of decentralized developers essentially performing maintenance services rather than making any fundamental changes. All transactions involving Bitcoin are recorded onto Bitcoin's blockchain, a public ledger not under the control of any single authority. Basically, the blockchain is the distributed database, or ledger, that keeps the record of all Bitcoin transactions. Copies of this ledger are kept on servers, also known as nodes, worldwide, making Bitcoin decentralized by nature. As a result, there's a low possibility that a central authority can interfere or halt operations. Furthermore, unlike fiat currencies such as the US dollar, Bitcoin isn't backed by government authority. The Bitcoin that a user has in their possession is kept on the blockchain, at a specific address, The address is also the user's pseudonym, meaning that the user can make transactions without having to reveal their identity. To access Bitcoin, the user requires a cryptocurrency wallet, a program containing the public and private keys, which are strings of randomized numbers and letters. The public key is derived from the private key, and serves as the public address that others can see and use for transferring Bitcoin. Also called a secret key, the private key works like a password, used to decrypt and encrypt the wallet, as well as sign transactions and prove wallet ownership. When a Bitcoin transaction is made, it needs to be verified. Specialized computers or mining rigs solve mathematical puzzles to verify if the user's wallet has the required funds and whether the transaction is signed by the user's private key. This verification process is called proof of work. In very simple terms, the puzzles involve guessing the encrypted serial number or hash value until one of the guesses yields the correct answer. Once solved, other miners can use the serial number and confirm if it's the solution. The verified transaction is grouped with the other verified transactions into a block, which is then appended onto the blockchain. Due to Bitcoin's code, the miner with the solution will then be rewarded with newly minted Bitcoin. This process where new Bitcoin enters circulation is called mining. The maximum supply of Bitcoin is 21 million. Once the total supply of Bitcoin reaches that amount, no more Bitcoins will be mined or created. Even then, miners will still be incentivized to keep the network running via transaction fees paid by users making Bitcoin transfers. Bitcoin's price is determined by supply and demand, and therefore heavily influenced by market sentiment. Bitcoin supply is limited, so speculative frenzies can result in huge price run-ups. On the other hand, negative market sentiment also significantly affects Bitcoin's price. For example, governmental regulations can cause immense price drops, while news about adoption can boost the price. Before investing in Bitcoin, you should understand that Bitcoin is extremely volatile, due to its speculative nature and immaturity as an asset compared to other investment vehicles and currencies. For example, in November 2021, Bitcoin reached a high of almost $70,000 and crashed all the way down below $20,000 by June 2022. However, drastic price crashes like this are common, and experienced investors and traders commonly see these as money-making opportunities. Moreover, volatility works both ways, and many long-term holders have made hefty profits. For example, if you had bought Bitcoin at the start of 2020 and sold it at the end of the same year, you would have made a 300% profit. It's possible that with widespread adoption, Bitcoin's price will stabilize over time to become a steady store of value. But for now, Bitcoin is still a high-risk, high-reward asset, and should currently be treated the same as any other risky investment. To summarize, Bitcoin is a new type of currency created to reduce the reliance on traditional third-party intermediaries. It functions as both a store of value and an alternative payment system. The blockchain technology introduced by Bitcoin also provides secure, pseudonymous, and immutable digital monetary transfers. Moreover, it's a self-sustaining system where participants in charge of verifying the transactions and keeping the network secure are incentivized with new Bitcoin. Bitcoin has received wide adoption since its inception in early 2009 and has been on a consistent uptrend. For beginners that are new to crypto, you may opt to keep a small amount of Bitcoin first to try it out. Once you get more familiar with the crypto space and you come to like investing in this new asset, you might want to increase your Bitcoin allocation. If you want to get your hands on some Bitcoin, you can buy and trade it directly on Phemex. Alright, I'll leave it there for this brief introduction to Bitcoin. If you didn't catch the previous two videos, you can go back and watch them. And we'll have more introductory videos to come soon. So if you're interested in those, don't forget to subscribe to the channel. Also, once again, if you did enjoy this video or found it helpful, please give it a like, comment something, and maybe share it with your friends. Anyway, no matter if you like or not, thanks for watching, and I'll see you guys next time.